Welcome to The Explainer. Today, we're digging into a massive move by a retail giant. And get this, we're going to break it all down using just one official public document that tells the whole story. Their quarterly 10Q report, filed right with the SEC.
So, a name you definitely know, a store you've probably shopped at, is making a really aggressive play to get even bigger. We're talking about a move that could totally reshape how and where we all buy our sports gear.
And here's the number that just pops off the page. $2.4
Billion.
That's the price tag for this whole thing. A blockbuster acquisition that's sending some serious shockwaves through the world of sports retail. Okay, so let's get right into it. What is this blockbuster deal? Who's buying who, and what's the story here? Yep, you're seeing that right. Dick's Sporting Goods is buying Foot Locker. And look, this isn't just some small acquisition. This is one of the biggest names in the game buying a global leader in sneakers and apparel. It is a huge deal. And you know what's crazy? The speed. This whole thing has moved at a breakneck pace. The offer was on the table in May. Shareholders gave the thumbs up in August. All the regulators are on board, and the transaction is set to be a done deal in just a few days. And here's the real kicker. This isn't just about adding more stores in the US. No, this is a global play. By snapping up Foot Locker, Dick's instantly plants its flag all over the world. We're talking about 2,400 new stores across 20 different countries, from North America to Europe, Asia, and Australia. All right, a multi-billion-dollar shopping spree like this brings up a pretty obvious question, right? How in the world can they afford this? Is the company actually healthy enough to pull off something this big? Well, if you look at their own numbers, the answer becomes pretty clear. Their sales are heading in the right direction. We're talking a 5% jump in the second quarter compared to last year, hitting $3.65 billion. That kind of growth is exactly what gives a company the confidence and the cash to make a big move. But, sales are one thing, but what about actual profit? Well, they're crushing it there too. This number right here, that's their net income, their profit, for just one quarter. Over $381 million. A company pulling in profits like that is definitely operating from a position of strength. And to top it all off, just look at the cash they have on hand. They're sitting on a war chest of over $1.2 billion in cash. So yeah, when you add it all up, the sales growth, the solid profits, and all that cash, you can see exactly how they're bankrolling this massive investment. Okay, so we've seen the deal, and we've seen the powerful financials that are making it all possible. And like I said at the very beginning, all of these details, every single number, comes from one specific official source. Yeah, none of this is guesswork or some analyst's hot take. Every single fact and figure we've talked about comes straight from an official document that all public companies in the US have to file. And that document is called a Form 10Q. The easiest way to think about it is like an official report card. It's something companies have to release to the public every 3 months by law. It gives us and all investors a super detailed look under the hood at the company's finances, its strategies, and even its risks. Okay, so now that we know where this rock-solid info is coming from, let's dig back into that same report and see what it says about the future. What's the strategy moving forward? And maybe just as important, what do they see as the biggest risks? And this right here is their game plan. And it's so much more than just buying up Foot Locker stores. The real strategy is to tap into Foot Locker's deep roots in sneaker culture. They want to use that to fuel their own big transformation, turning their stores into destinations, not just places to buy stuff. So they're expanding things like their House of Sport concept while also pouring money into their website and app, tying it all together. And they are not messing around with this House of Sport idea. They're planning to have somewhere between 75 and 100 of these huge experience-first stores open by 2027. That's a massive commitment and a really clear sign they're all in on changing what it means to go to a sporting goods store. But of course, a report like this has to be honest. The company is legally required to tell you what could go wrong. And they list some pretty significant hurdles, things like inflation and a shaky economy, intense competition, and hey, even the huge challenge of actually merging these two giant companies together successfully. So, okay, we've gone through the money, the strategy, the risks. Let's pull back. What's the final takeaway? What does all of this really mean when you put it together? This quote, which we pulled right from their own analysis in the 10Q, just nails it. They're basically saying that sports and culture are blending together more than ever before, and they believe they are in the perfect spot to capitalize on that. So if there's one thing to take away from all this, it's this. You're watching a financially powerful company play offense, big time. They see this cultural wave happening where sports, fashion, and lifestyle all crash together, and they're spending billions to put themselves right in the middle of that universe. But here's the bottom line. It's still a $2.4 billion bet. And any bet that big comes with huge risks. They've laid out a super clear vision, and they've got the money to go after it. The only question now is, will it all pay off? Is this a championship-winning play or a costly fumble? Only time will tell.